Welcome to the Wednesday edition of Tech Stocks Daily. Ready for some tech and trading excitement? Today we're diving deep into Netflix's upcoming Q2 earnings and their latest subscriber strategies. Then we'll tackle Google's much-anticipated Pixel 9 series and new AI tools shaking up the Indian market. Don't miss NVIDIA's phenomenal stock rise and Apple's recent geopolitical hurdles affecting share prices. Whether you're a seasoned investor or a tech enthusiast, it's all here. Stay tuned for the juiciest updates and strategic insights. Let's get started. Oh hey there, tech and streaming enthusiasts, buckle up, because today's hot ticket item is Netflix. And boy, do we have a lot to unpack. So why is Netflix creating buzz today? We've got our sights set on their upcoming Q2 earnings report, scheduled to drop on July 18th. Let's dive into the juicy details and what analysts are saying. First off, Netflix is forecasting its Q2 revenues to jump by 16%, translating to a cool $9.491 billion. If you're cosmopolitan and think in foreign exchange neutral terms, that's a snazzy 21% growth, thanks to some price tweaks in Argentina and its currency devaluation. And despite Netflix's projection, the Zacks consensus estimate has even more faith, aiming for $9.53 billion in revenues. On the earnings per share front, Netflix is batting for 468 cents, a solid 42.2% increase from last year. However, the genteel folks at Zacks are a hair more optimistic, pegging it at $4.70. For those betting on Netflix pulling another surprise, as they did last quarter by jolting us with a 17.7% earnings surprise, hold your horses. The consensus and forecast gap is narrow this round, throwing some cold water on hopes for an earnings blowout. So what's Netflix been up to? Aside from streaming your fave shows and creating water cooler buzz, they've also been rolling out some strategic moves. Remember their low-priced, ad-supported plans? Those aren't just there for your frugality. They're also a gambit to reel in more subscribers and revenue. Tack on their crackdown on password sharing. Now, how many of you felt personally attacked? This strategy spans over 100 countries and reportedly covers more than 80% of Netflix's revenue base. By incorporating these ideas, Netflix has not only boosted its subscription model, but also laid down a gauntlet in the competitive streaming wars. Despite a probable seasonal dip in new subscribers this quarter, Netflix expects to see year-over-year growth in global average revenue per membership. Another notch on their belt? Expanding their games portfolio with titles like Grand Theft Auto: The Trilogy to keep you even more engaged and slap your productivity into submission. Still, it's not all smooth sailing. Competition remains fierce, with Disney+, HBO Max, Peacock, Paramount+, Apple TV+, and Amazon's Prime Video hot on their heels. Traditional TV, TikTok, and even gaming also nibble away at that precious attention span we all hate to admit is short. Zooming out, let's ponder the stock value. Netflix has gained 38.4% in the year-to-date period, easily outpacing Disney's meager 7.3%, and even Apple's uplifting 22%. But keep an eye on those valuations. Netflix trades at 6.85 times forward 12-month sales, rather hefty compared to its 5-year median of 6.02x, an industry average of 4.43x. Sure, it might look pricey, but its first-mover advantage and monstrous global footprint still make it super attractive. So brace yourselves for the July 18th earnings reveal. Whether you're a bull or a bear, Netflix has plans to keep redefining the streaming game and maybe even your subscription habits. Trade confidently and keep those alerts switched on for the latest in tech. Now that's it for Netflix. Don't forget to stay tuned right here for all your breaking tech news, summarized into spicy, binge-worthy bites. Hold on to your gadgets, folks, because Google has been on a news rampage today. Let's dig into why the tech giant is dominating headlines. First up, the Google Pixel 9 series. Google is gearing up to introduce the Pixel 9 series at the Made by Google event on August 13th. Trust me, it's time to get those popcorns ready because these smartphones are rumored to pack some serious upgrades, especially in the camera department. Google plans to overhaul the imaging features with swanky new sensors across the entire lineup. We're talking about a new front-facing camera sensor on the Pro models and autofocus functionality on the standard Pixel 9. That's right, say cheese, and picture-perfect selfies could be a reality. But hey, that's not all for the Pixel 9 series. Because variety is the spice of life, Google might be rolling out not 2, but potentially 4 models. Apart from the Pixel 9 and Pixel 9 Pro, we're possibly looking at pixelated dreams with the Pixel 9 Pro XL and the Pixel 9 Pro Fold, the latter being a foldable delight fitting right into their flagship series. With all these new sensor upgrades, particularly the Sony IMX858 for ultra-wide-angle shots, Google seems to be putting their best foot forward to improve your low-light photography game. Picture this, moonlit scenery that makes your Instagram followers swoon. But while Google is adding features, they're also taking some away. Yup, Google is pulling the plug on the Notes experiment in Google Search, which allowed users to add personalized notes and comments to search results. This feature, which felt like a reshuffle of Reddit-like community vibes within Search, is ceasing by the end of July. So if you have any brilliant notes, make sure to grab them by August using Google Takeout. Google promises to continue innovating more ways for people to connect authentically in search, so fingers crossed for what's next. On a serious note, who's winning the browser war? Apple seems to think it could be them. They've fired shots at Google Chrome, advising millions of iPhone users to stick with Safari. Citing Chrome's alleged privacy vulnerabilities, Apple's newest advertising campaign looks like something Alfred Hitchcock would have cooked up. In no uncertain terms, Apple's ads imply that if you don't want to be tracked online, Safari is the way to go. An ambitious move, but with user privacy increasingly under the spotlight, it might just sway some minds. Last but certainly not least, let's turn our gaze toward India. At the Google I/O Connect Bengaluru 2024 event, Google unveiled a plethora of new AI tools and partnerships geared toward empowering Indian developers and startups. Collaborating with the MeitaY Startup Hub, Google aims to train around 10,000 startups in the ever-evolving AI landscape. They're expanding access to AI models like Gemini and Gemma, and introducing all new language tools from Google DeepMind India. Google is making waves with Project Vani, which holds over 14,000 hours of speech data from 80,000 speakers across 58 languages. Talk about a multilingual revolution. Google's creating comprehensive development ecosystems using frameworks like Indic GenBench and the Matformer. For all you coders and developers out there, this is pretty much the Hogwarts of AI. Stay tuned for more tech updates. But as for Google, their plate seems quite full, and they're serving technology with a side of innovation. Hey tech enthusiasts, buckle up because today we're delving into the spotlight hogger of the tech world, NVIDIA. Not one but two sizzling pieces dropped today about this AI juggernaut, and let me tell you, NVIDIA is absolutely dazzling the stock market and investor paradise. First up, let's talk about NVIDIA's march to glory on the stock battlefield. The name of the game? Growth and dominance. NVIDIA has been riding the AI wave like a pro surfer catching the perfect break. Their stock has rocketed an astounding 762% since the start of 2023. That's not just a victory lap, that's lapping everyone on the track. You know you're doing something right when your stock price blows up by over 155% year to date and sets a record by bagging $277 billion in market cap in a single day. Eat your heart out, Wall Street. Now, if you're wondering how they've managed this miracle, it's all about their top-tier GPUs, which are the golden tickets for AI applications. In the first quarter of 2024, NVIDIA did not just pass, they blitzed past expectations with a revenue of $26.4 billion, surpassing the estimates by 7%. Their EPS, a mind-boggling 612s, where everyone was expecting just $5.49. It's like watching a chef cook with all green lights turning on. Everything is coming up perfect. The brilliance doesn't stop there. On June 2nd, CEO Jensen Huang introduced a new generation of AI chips with as much flair as a blockbuster movie premiere. Talk about ensuring you stay on top of the game. But wait, there's more tantalizing talk from the investing world. With NVIDIA steaming hot, mutual funds with heavy NVIDIA exposure are being touted as the star picks. Funds like Permanent Portfolio, Fidelity Capital Appreciation, Putnam Large Cap Growth, and American Fund's New Economy are not just dipping their toes, but diving right into NVIDIA stocks. It's a brilliant play for investors who want both stability and a ticket on the NVIDIA rocket ship. Now, every hero has a nemesis, and for NVIDIA, it's the looming question of whether they could surpass Apple in market valuation by 2025. Considering NVIDIA's giant leap in AI, having 70 to 95% of the AI chip market under its hood is like being Thanos with all the Infinity Stones. Their surges haven't just been market waves, they've reshaped the AI landscape entirely, outpacing AMD and Intel like they're stuck in molasses. Comparatively, Apple might be the reigning champ with a $3.5 trillion valuation, but the battlefield of innovation is dynamic. While NVIDIA has kept its crown in AI, Apple faces fierce giants like Microsoft and Alphabet. Their AI game might not catch fire as NVIDIA's has, underscoring the point that success in tech isn't just about chips, but strategic mastery. In conclusion, NVIDIA's story is an unstoppable epic of innovation, market dominance, and relentless growth. Whether you're an investor or a tech geek, you do well to keep an eye on this titan. And could they eclipse Apple by 2025? Given their current trajectory and Apple's own turbulent waves, it's not a space shuttle flight of fancy. Stay tuned, tech buffs, because this story is far from over. Hey techies! Buckle up for today's deep dive into why Apple made headlines. It's a roller coaster ride, and yup, we're talking big dips, uncertain twists, and potential gains. Apple shares took a bit of a nosedive today, falling by 2.8% to $228.34. What's the reason behind this market shakeup? It all starts with the geopolitical chess game that is the China-Taiwan standoff. Former President Trump's recent comments have amplified concerns that this situation could escalate, which could spell disaster for companies with supply chains tightly wound across these regions. Now, if you're wondering, why should Apple care? It's all about the chips. Apple really depends on Taiwan Semiconductor Manufacturing Co. for the chips that power everything from your iPhone to your MacBook. Any hint of instability or trade restrictions could mean delayed production, increased costs, and a bottleneck in Apple's well-oiled machine. Adding fuel to the fire, Trump's recent critique focuses on U.S. companies outsourcing manufacturing to Taiwan. If the political winds shift towards pressuring these companies to bring manufacturing back to the U.S., Apple might face some hefty bills. Just think, higher labor and operational costs stateside compared to Taiwan's setup. This could lead to sky-high production costs, potentially impacting pricing strategies and profit margins. Good luck explaining those newly inflated iPhone prices to consumers. But hey, This isn't just about worrying and hand-wringing. This situation opens up opportunities for investors. With Apple shares already up 17.5% year-to-date, there's plenty of buzz on whether to hold the line or ring the register, cashing out while you can. Swing traders might see this as an opportune moment to make quick gains by selling high-performing stocks. Long-term investors, on the other hand, could be eyeing this dip as a sweet spot to buy more Apple shares at a discount, betting on the tech giant's future performance. Who doesn't love a good discount, right? But how does all this stack up with Apple's arch nemesis, Microsoft? Both titans have had an impressive year, with stock prices bubbling up about 20% in 2024. While Microsoft has the edge in earnings growth predictions and overall return over the decade, Apple has a clear upper hand in shorter-term gains over the last 5 years and even 3 months. While considering whether to dive into Apple or Microsoft stocks, bear in mind that Apple's price-earnings ratio suggests it's relatively cheaper compared to Microsoft. However, remember that higher anticipated growth for Microsoft could make it a juicier bite for future returns. In conclusion, today's Apple news is a cautionary tale of how geopolitical issues can influence market movements and potentially create both risk and opportunity. Whether you're a day trader ready to move fast or a long-term investor with eyes on the horizon, Apple's share movements are worth a watch. So, what do you think? Is Apple stock about to take a bite out of your wallet, or are you sharpening your fangs for some discounted delights? Drop your thoughts in the comments below. Let's get the conversation going and see where everyone stands. All right, tech aficionados, let's put our trading caps on and dive into today's market musings. If I were to spotlight one stock and give my 2 cents on what to do, I'd pick, drumroll please, NVIDIA. Now, should you buy, sell, or hold this tech titan stock given the latest scorching news? Let's untangle this beast. Buy. Why buy? Oh, where do I start? Let's paint the picture with a mastermind's brush. First, NVIDIA's growth trajectory is nothing short of astronomical. Their stock has soared a jaw-dropping 762% since the start of 2023. And no, that's not a typo. They've also gained 155% year-to-date, and what company bags a record $277 billion in market cap in a single day? You smell that? It's the sweet scent of success, fresher than a morning's brewed coffee. This massive rise isn't conjured out of thin air. NVIDIA's GPUs are the golden standard in the AI realm, with their Q1 2024 revenue shaking up the industry at $26.4 billion, shamelessly surpassing expectations and flaunting an EPS of $6.12. NVIDIA is not just a player, it's a game changer. Let's not forget, CEO Jensen Huang just launched a whole new generation of AI chips. That's innovation on overdrive. Hold. On the other hand, a decision to hold NVIDIA could be wise for the cautious investor. They are already sitting on mammoth gains. These could potentially increase further, riding the AI wave. Mutual funds boasting heavy NVIDIA exposure are insightful hints pointing to consistency rather than abrupt action. Flex those investing muscles and hold tight for a bit longer. After all, you've already witnessed some stellar profitability. Sell. If there's ever a pocket whispering to sell, consider it the devil's advocate. With ultra-heavy valuations at sky-high levels, decipher if the stock's growth is sustainable for the long term, or if it's skyrocketed to moon or asteroid bursting levels. Particularly if you're an avid follower looking for profit-realizing windows, this could be a peak moment given the impressive climb. But as Apple's push to claim AI market attention and innovate hammers forward, baseload the decision scientifically against competitor pressures. Suppose you want to lock in some hearty gains and redistribute while NVIDIA's stars have yet to dim, a tactical sale might just fit your portfolio pruning strategies. Remember folks, this analysis is my radar reading for you. Every stock decision should resonate with research and risk appetite. I'm here with the highlights, but always dive deeper into your financial waters. So to sum it up, based on today's stellar NVIDIA news, my recommendation leans towards buying, but why not hold, given the mighty beast that it qualifies as? Either way, you tech trading wizards have some dazzling days ahead. Until next time, take charge and trade smart. It's been a roller coaster in the tech market today. Netflix is gearing up for its Q2 earnings reveal with strong growth projections and subscriber strategies. Google is creating buzz with its new Pixel 9 series and useful AI tools. NVIDIA continues its unstoppable march with skyrocketing stock performance and AI dominance, while Apple navigates geopolitical challenges and takes a dip. If you loved this rundown, don't forget to like, subscribe, and share this video with your fellow tech enthusiasts. And hey, make sure to join me again tomorrow for another slice of the latest tech news. Catch you later, tech trailblazers.